If you are 62 or older and you have not looked closely at what CRA is sending out this June, you need to stop whatever you are doing right now, because there is a real financial opportunity sitting in front of a lot of Canadians right now, and most people have absolutely no idea it is there. Every year around this time, adjustments happen. Payment amounts shift. Eligibility thresholds change. And the Canadians who know about these updates collect every dollar they are owed. The ones who don't, they miss out, sometimes by hundreds of dollars, sometimes by thousands, simply because nobody told them. Today, I am going to walk you through exactly what is happening this June, what it means for your monthly income, and what you need to do or avoid doing so you do not leave money on the table. Let's get into it. The first thing you need to understand is that June is not just another payment month. For millions of Canadians 62 and older, June marks a critical period when several government benefit programs recalculate, adjust, and in some cases, send out additional amounts based on changes CRA made earlier this year. Most Canadians don't realize that these adjustments don't always happen automatically, or that the amount you receive depends heavily on information CRA currently has on file for you. If that information is outdated, incomplete, or based on a tax return you forgot to file, the amount hitting your bank account could be far less than what you actually qualify for. This is where people often miss out. They assume the government has everything figured out on their end. But CRA works with the information you give them. And if you haven't filed your 2023 tax return yet, or if your income situation changed last year, your June payments may be based on old numbers, and that could be costing you real money right now. Let's talk about the OAS increase first, because this one affects almost every Canadian 62 and older who is approaching or already receiving old age security. CRA and Service Canada adjust OAS payments quarterly based on the Consumer Price Index. That means the cost of living directly affects what you receive. As of the most recent adjustment, OAS payments have been bumped up. For someone receiving the standard OAS amount, we are talking about an increase that, when you add it up over 12 months, can mean several $100s more per year compared to what was being paid just a couple of years ago. But here's what many Canadians don't know. If you turned 65 and delayed taking your OAS even by 1 month, you qualify for a permanent increase to your base amount. For every month you delay past 65, your OAS goes up by 0.6%. Delay it a full year, that is a 7.2% permanent increase. On a payment of around $700 per month, that is roughly $50 more every single month. And because it is permanent, that adds up to over $600 extra per year for the rest of your life. Most people just take OAS the moment they are eligible. They don't realize the deferral strategy could be worth thousands of dollars over their retirement. If you are between 62 and 65 right now, this is something you need to be thinking about before you reach that eligibility window. Now let's talk about something that could affect you even more directly: the Guaranteed Income Supplement, or GIS. GIS is a tax-free monthly payment from the federal government for low-income seniors who are already receiving OAS. And the June payment window matters here because GIS is recalculated every July using your previous year's tax return. Here's where things become important. If your income dropped in 2023 compared to 2022, maybe you worked less. Maybe you had fewer investment earnings. Maybe you stopped receiving certain income. You could qualify for a much higher GIS payment starting this summer. But only if CRA has your 2023 tax return on file. This is one of the most common mistakes I see Canadians make. They think because they don't owe any taxes, they don't need to file. But filing your return is exactly how CRA determines your GIS eligibility and your payment amount. If you haven't filed, you could be losing out on hundreds of dollars every single month. Let me put a real number on this. The maximum GIS for a single senior right now is over $1,000 per month. Someone receiving even a partial GIS benefit at, say, $400 per month, that is $4,800 per year in completely tax-free income. And it goes up or down based on what CRA sees on your most recent return. If you haven't filed your 2023 taxes yet, that needs to happen as soon as possible. Every month you delay is potentially a month of GIS money you are not collecting. There's another detail many seniors overlook, and it connects directly to what is happening in June: the GST-HST credit payment. CRA issues the GST-HST credit 4 times per year, and one of those payments comes out in July, calculated based on your 2023 return. For seniors with modest income, this is not a small amount. A single senior can receive over $500 per year through this credit. A couple can receive even more. But again, and I cannot stress this enough, this is based entirely on your filed tax return. If CRA does not have your return, they cannot issue the credit. It is that simple. What a lot of Canadians don't realize is that the GST-HST credit can stack with other benefits. You can receive it alongside OAS, GIS, CPP, and provincial credits all at the same time. These amounts are designed to layer on top of each other, but you only access all of them when CRA has a complete picture of your financial situation. Now let's talk about CPP, Canada Pension Plan, because there is something specific happening in 2024 and 2025 that is quietly affecting the retirement income of millions of Canadians. Over the past few years, the federal government has been expanding CPP in 2 phases. CPP enhancement means that Canadians who contributed to CPP during the enhancement years will eventually receive higher retirement benefits than previous generations did. But here is what matters for you right now if you are in your early 60s. If you are 62 and still working, even part-time, your enhanced CPP contributions are still building. Every year you continue contributing, even at a modest income level, adds to your eventual benefit. And because the CPP enhancement also increased the earnings ceiling, contributions made in recent years carry more weight than older ones. Most Canadians don't realize that taking CPP at 60, while possible, locks in a permanent reduction. Taking it at 60 instead of 65 reduces your benefit by 36%. On a CPP payment of $900 per month, that reduction costs you $324 every single month for the rest of your life. Over 20 years, that is well over $75,000 in total income you permanently walked away from. On the flip side, delaying CPP past 65 increases your benefit by 0.7% per month, 8.4% per year. Delay to 70 and your CPP is 42% higher than your age 65 amount. These numbers are significant, and the decision about when to take CPP is one of the most important financial choices a Canadian retiree will ever make. Let's bring this back to June and the practical steps you should be taking right now. Pay close attention to this. CRA has been actively working to improve how Canadians access and update their benefit information through My CRA Account, the online portal where you can see your benefit amounts, check your payment history, and update your personal information. If you have not set up My CRA Account, June is a great time to do that. You can see exactly what payments are coming, verify your direct deposit information, and make sure CRA has your correct address and banking details. A payment going to a closed bank account or an old address is a payment you are not receiving. And while CRA will eventually reissue it, there can be delays of weeks or even months. Getting your information verified now prevents that problem entirely. There is also something specific for Canadians between 62 and 64. The age credit, a federal tax credit, becomes available to you when you turn 65. But there are provincial credits and disability-related credits that some Canadians in their early 60s qualify for right now, depending on their health situation, income level, and province of residence. Many of these credits are claimed through your tax return and reduce the amount of tax you owe or generate a refund. Here's what many Canadians don't know. Some of these credits can be claimed retroactively for up to 10 years. If you or a family member has a qualifying condition that you never claimed on your taxes, you could potentially recover thousands of dollars by filing adjustments for prior years. This is not widely advertised, but it is a legitimate process through CRA. Let me give you a quick summary of everything we covered today, because there is a lot here and every single point can directly affect the money you receive. June is a critical month because OAS payments reflect the most recent quarterly adjustment. GIS payments are recalculated in July based on your 2023 tax return. If you have not filed, do it now. The GST/HST credit payment coming up is also based on your filed return. CPP timing decisions can mean the difference of tens of thousands of dollars over your retirement. And verifying your CRA account, banking details, and personal information ensures you actually receive every payment you are owed. The Canadians who collect the most from their government benefits are not necessarily the ones who paid in the most. They are the ones who understand the rules, file their returns on time, and take action before deadlines pass. If you found this helpful, do me a favor and hit that subscribe button right now. Because these benefit rules, payment amounts, and eligibility thresholds change constantly. And the people who subscribe here are the ones who find out before the deadlines hit, not after. Every week I break down exactly what is changing with CRA, OAS, CPP, GIS, and every other benefit program that affects Canadians 62 and older. The information is free. The cost of not knowing it is not. Subscribe now so you never miss an update that could affect your income, your eligibility, or your financial future. And share this video with someone in your family who is approaching retirement, because chances are there is at least one thing in here they did not know either.